Hello, YouTube. Greed is back and the market continues to go higher. We pushed into 61 as high as 63. And now we want to ask ourselves whether or not we're going to continue to go higher or if we're going to go down. And I say that because I don't think a lot of people believe this move right now. So please make sure to drop me a comment and leave me a 1 if you trust this move and a 2 if you do not. I got a feeling a lot of people don't trust this move, which is the reason why we can go higher. We are now inside of our yellow box, which means the period where we're going to be attempting to get to bull market territory up here at about 418. We can note our low of the day. 408.44 is really important. Why? It goes back to this high here on March 6th, but it also goes back to our gap. And it also goes pretty closely back here to this area I'm looking at here, going back to December 13th. Why is that December 13th area important? I'll show you why. Because I wasn't sure where we were going to close today. So I wasn't sure whether I was going to put a head and shoulders in the thumbnail or if I was going to talk about the bull case. Well, here you go, right? We have the, oops, that's sloppy. Here we go. Left shoulder, head, and right shoulder. So if we can hold this 410.49 area, call it 411, which is roughly where we are, hey, we can keep going higher. What we want to be very mindful of, though, is that there was a very clear pattern for me today that I was watching really, really close. It's 15-minute higher lows and higher highs. And if we look here to what happened going on Friday, low, higher low. Like it's all higher lows and higher highs all the way up until we don't go higher. We start going sideways, go back down, and then it just resumes. Low, higher low, higher low. We get those higher highs and higher lows. Squeeze it all the way into the open today. We pushed up to 411. Then what happens? Bearish engulfing, high, lower lows. And then it just starts all over again. Higher lows, higher highs. We go sideways for a little bit. And then one more time, all those higher lows and higher highs. And that's like a really simple pattern. So why would that be happening? Because we have to be very mindful of this. We can note here that fear and greed is now back to greed. And the thing you want to do now, which I laid out in the video, is that you want to be a little bit more like Bruce Lee. I'm going to ask you for one favor right now, please and thank you. If you're enjoying the video, I would really appreciate if you could consider smashing that thumbs up and subscribing to the channel if you're enjoying the content. We put out videos every single day, and it would mean a lot to me personally. We're going to follow and update you all week with this story as well. So the full year has never been lower. What does that mean? S&P 500 returns after a more than 7% gain in the first quarter. It is all green. Sometimes we give back gains, but as of right now, there has not been one time for the full year return where we closed red. Thank you to Kira for sharing this image as well. All right, let's move forward. Here we go. Why does this matter? Well, I think a lot of people are going to be dropping 2s in the chat. Why? Because they're not on the train. So as the train is rocketing higher, they're like, well, I'm going to wait for the dip. Well, maybe you're not going to get it. Maybe we're just going to go up, 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 and that's it. Why? I'm looking here to the CFTC short positioning, which we alluded to on the weekend, alluded to on the Friday stream, and have been for the last while. This is a very painful trade, and we're now well over that area that I had laid out not that long ago, which was a threshold for these bears. What was it? We can look here to a tweet that I put out. Again, link in the description if you want to follow me. We have it right here. 39.66 was the median. 40.20 was the largest zone. 41.20 was the next notable zone. Where are we right now? Oh my goodness, 41.50. Yes, we're over 100 points higher. So that's like a lot. So I think what part of what's happening to these bears is that they have a sunk cost fallacy. So the sunk cost fallacy is a phenomenon whereby a person is reluctant to abandon a strategy or course of action because they have invested heavily in it, even when it is clear that abandonment would be more beneficial. So they're losing millions like every day being short. And I want to remind you of one more thing, because why? Let's read that Bruce Lee quote now, and we'll think about the short positions, but also what's been working for the last 3 months might not be what's going to work going forward. And I'll touch on that in a moment here. So we look at year to date, tech, right? That's been the trade. Well, let's look at the 1 day heat map. Well, tech's it's not bright green. It's not red, but it's also not bright green. Tesla sell the news, record deliveries, sell it. That's what it looks like. So down 6%, oil up. And why does that matter? Well, because we saw those OPEC cuts, which we'll touch on in a moment. So Bruce Lee tells us to empty your mind, be formless, shapeless, like water. Now you put water in a cup, it becomes the cup. You put water in a bottle, it becomes the bottle. You put it in a teapot, it becomes the teapot. Now water can flow or it can crash. Be water, my friend. Why? Because you want to make sure you understand what April 1st actually means. It means a new month, a new quarter, and a new week. So we'll look at these last headlines here, and then we'll look at some charts. OPEC shock cut is a capitulation to oil's decline, which could what? Well, it tells us there's confidence in demand. So usually oil is used when we're expanding the economy. Oh, no, that's right. And we just got our, this is updated today at 11. This is the GDP now from the St. Louis Fed. It tells us that Q1 GDP shrunk to 1.7. This reading was as high as about 3.5, maybe even a little bit higher. Well, now it's down to 1.7. And that headline we just showed you shows that maybe the U.S. is heading towards recession. So why does this matter? Well, let's remind ourselves one more time. We buy fear and we sell greed. So now that we're in greed, what do? Do we raise stops? Do we exit? Do we sell? Do we go short? Well, that's up for you to decide. If you want to join me, Justin from YouTube, you can join me for 14 free days and you can trade with me. Link in the description if you want to find out more. So what does that mean? It means that you need to make sure you have a playbook, a roadmap, a plan of attack. Why? Because we usually take the staircase up and the elevator down. So that same, I'm going to give you the cheat code just because I want to. That same thing that we noted on the 15-minute chart with the higher lows and higher highs. Well, if the one-day chart continues to go higher lows and higher highs, that is the pain trade for the bears. They are getting squeezed. It is painful, and it doesn't look like it wants to stop. If we look over here to QQQ, though, where is the warning? Tell me. Why? Well, inside bar. Oh, so we don't have the pattern from the low that we established last Tuesday. Low, higher, low, higher, low, higher, low, higher, low. So we got the higher low, but we do not have the higher high. High, higher, high, higher, high, higher, high, lower high. So we have an inside bar forming here. We're right on our uptrend. We're over resistance. We're battling for this gap we mentioned on the weekend, going all the way back here to August and September of last year. Also, why does this matter? Well, because it could continue to power up here, which means that we could just keep rocking this the short-term daily uptrend where we just go up, or we could not. We could crack it and fall down. This was a false move last time. That was a trap. But if we look here to a stock like Nvidia as a roadmap, well, just when it looks like we're going to stop going up, boom towns, baby, whoop, whoop, whoop. So we just kept going up. And remember, the S&P is not the NASDAQ. So the S&P is still in expansion mode. Still it's a higher high. QQQ does not. So I'll show you the reason why I think that's happening in a moment. We'll look at this one chart here on SPY first. Why? We talked about how we stopped going down, but maybe we're going to start going back up because this blue line is the all-time high connect going back to 2018 and 2020, and we are poking over it. If we look here to a short-term time frame, let's go to a 15-minute chart and just see that we're actually above that blue line. Oh my goodness. We got over it, came back down, and now we're back over. Are these bulls in charge? Are they going to melt us higher? Here is one clue I'll be watching for to figure out who are the leaders for this next quarter. It's a simple one. It's QQQ divided by DIA. Why? Because I mentioned before that this was a critical time for the market. Q3 or October 31st. Then we got December 31st. And now we got March 31st. Each one of these times, it was a turning point. We went nowhere. Then we went up. And now the question is whether or not tech or QQQ is going to continue to outperform DIA. And if you want to watch more, I encourage you to watch the video now queued up over here on the left-hand side. If not, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you again.